Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, September the 14th. The year's 2022. Let's talk trading. Trading is all about you, part 10 with Walmall. These videos for educational purposes only. Your results may differ from mine and differ from Walmall's. Walmall, part 10. Let's see, where did we leave? I know we had more to talk about. I believe yesterday we talked about, what did we talk about yesterday?
well, I know one thing that I wanted to go and talk about, that one of the things we were basically looking at the charts at one point and just looking at where price is going, because if you remember, when we did the video yesterday, it was when the inflation numbers went and dropped, and we saw those huge moves, and we started talking about where price could go. And not to pat you on the back or anything, it's not that you need that, but more of, just recognition that, time and experience matters. And the reason why time and experience matters, what I'm going to get at here, is that, basically you called out all of the things that were going to happen, or more than likely were going to happen based on your experience. You called out, the 75 number, 1575. If it broke that, then it was going to go, and you ended there for a little bit, and then, it was going to break through that, and the next thing you know, it was going to go and head for the 60. And if it broke that, then bets were off as to where it was going to drop to, and again, that's not to go and, basically pat you on the back or anything, but what it does portend is, this thing is seat time matters. It really truly does matter, because it helps you with figuring out what's actually happening. Now, all that said, and here's where I'm going to go and turn this back into where what we've been talking about for the last couple of weeks. It seems like that couple of weeks. It's probably been about a week and a half, I guess. But, you got to trade what you see and not what you think. And the thing is, yeah, you know what? You were right. Hero, you were absolutely right. But in the process of getting there, you could have been chewed to death. You go back and look at the 1 minute and the 5 minute charts. You could have been chewed apart and chopped up into little itty bitty slivers if you weren't careful. And in terms of what your load was, in terms of where your stops were, in terms of where your TPs were, and all that type of stuff. And so you got to trade what you see. Yeah, we know that it's going to get there. But that doesn't necessarily mean that, it's going to go from, I think when we were talking about this, we were right below the 1600 level. It doesn't mean that it's going to be a straight line from, let's say 1590 to 1560, in 10 minutes. It's not going to be a straight line from here to there. It's going to get there. But the thing is, it's going to go and take a road, and that road is going to be a meandering road. It's not going to be a straight line road. And so we just got to keep that in mind, as we trade, having, and here's the thing about statistics, the thing is, statistics tells us what is more than likely going to happen, but it doesn't tell us what's going to happen in the next minute. It doesn't even tell us what's going to happen necessarily in the next 30 minutes or even the next 60 minutes. But what it does tell us is that based on, historical statistics, this is what most likely is going to happen. We just don't necessarily know when exactly it's going to happen. And it becomes a timing thing. And I know we talked about that a little bit.
Right. Just like hitting the pivots. It's like we know from statistics that these pivots are, more than likely going to get hit. So like today, price on my chart missed it by about 2 pips.
Right.
It needs to get up to 1573 and a half.
Yeah, it sounds like, remember that old expression, close enough is only good in what, hand grenades and horseshoes, right?
Yeah, and hydrogen bombs. Yeah,
and I'll go And I'll go and add in, calling pivots.
Yeah, and the other one was, for the weekly, we opened a way above it and we gapped up, and we know that one price likes to fill gaps, and it came down and it hit that weekly. So anybody playing that weekly gap fill, and they would have gotten paid off really nicely.
Right. But again, it gets down to what I said in the beginning of this video, and that is that the reality is, just because you know that's going to happen, and we all do know it, I know it, the statistics know it. But the thing is, what we don't know is that timing thing. We don't know necessarily when it's going to happen. So therefore, that's when our strategy comes in place. That's when we start figuring out, okay, what's the best way to play this? I know it's going to go and fill it, but I need to come up with a way to go and actually take advantage of it. Oh, what are some of the advantages? I mean, I can already hear it, down in the comments. Well, what is that strategy? And the thing is, you've shown so many strategies over the years, but essentially every one of the strategies comes down to a horizontal line. The reality is if it crosses that line or crosses a particular line and you figure out on a chart where that line is, the reality is that there's a good chance it will go and make a drive towards it. Doesn't mean it's going to get there, but it's going to go and make a drive towards it. And more times than not, that's what's going to happen. So you play it, and you're going to win some, and you're going to lose some. But the thing is, like I said yesterday, you got to be in the game. You can't just go and just, fold your cards and say, I'm done. You got to go and say, okay, I'm going to continue to play this game, until I actually wind up on the top side. And part of playing the game, this is where your trading plan comes in. You gotta be in the game to play it, which means that your trading plan's got to protect you to allow you to stay in the game long enough for you to go and take advantage. And if you don't have a trading plan that's there that keeps you in it for the long term, the reality is you can take, what's the odds that you're going to take 10 losses in a row? Pretty small. But, I'll go and say, but capitalized, bolded, double underscored, it can happen. It absolutely can happen. So does your trading plan take that into account? What do? You need to go and, what I do is in my trading plan is that I want to go and be able to sustain 15 losses in a row without adversely affecting my account. Doesn't mean my account's not going to be down. It'll be down. It'll be down significantly, but it's not going to adversely affect how much I'm trading. And that's what we need to go and do. Now.
Well, hold on a second. When you say adversely affect how much you'll be trading, you mean your lot size per trade?
What I mean by that is that I'm in a situation where I don't feel comfortable trading anymore because I don't have enough money in the account. Or that I don't necessarily mean, lot size. And the reason why I don't say lot size is because for me personally, it would be lot size. But a lot of other folks out there, they trade the way they trade. There's nothing wrong with this methodology. It's part of their trading plan. As their account goes up in size, they increase their lot size. Or increase their risk appetite is, the phraseology that's out there. And as their account goes down, they go and minimize it. And so what that means is that, adversely affected means that you've virtually, gone to the point where you take a trade and your lot size is so small. For these folks, it's so small that making up what you lost is nearly impossible. Okay? For me, adversely affects, I'm going to go and trade the exact same number of lots every time. That's just the way I do it. It's part of my strategy and what works for me, and so adversely affecting me or adversely affecting my account means I can no longer trade at that lot level. So that now I'm in a situation where, okay, I'm in trouble here because I can't trade at the lot level that I'm currently at, which means I got to go and redo my trading plan to figure out where I go from here. So that's what I mean by adversely affected. Did I answer your question, sir?
Yes.
Okay. But unfortunately, I lost my line of thought here. But But getting back to what I was saying, we need to go make sure that our trading plans are intact. And that's the most important thing. Is our trading plan intact to allow us to take that 10 or 15 losses in a row? I don't know if I've seen ever in my life have ever lost more than 5 in a row. I've lost 5 in a row, maybe 6, I don't know. But the thing is, I've planned into my trading plan that I'm not going to go and lose more than I'm not going to lose more than 10, but the trading plan allows me to lose 15. Okay, and why do I do that? Because you know what? As the expression goes, stuff happens. And you just don't know, and you need to go and make sure that I can come back tomorrow or next week or whatever that may be, and be able to continue in this business. And that's how does this go? And we talk about you, right? So how does this go and translate to you? Well, the things that affect me personally are going to be something that's totally different than what affects you TRO, or any other trader that's out there. We all have different limits out there that that are going to affect us. There are traders that are out there. They're in this just to, they like to have fun with it. It's a perfect example is my father. He just recently passed away, but he traded. He was a college professor for many, many years, but after retirement, part of his entertainment was trading. He traded in the stock market, and he did very, very well. But the thing is, for him, it wasn't livelihood. He was in retirement. He was very, very smart, very, very diversified, and he was very, very fortunate to, live a very fortunate life because of what he had done when he was a young man. So the money he made or lost while trading in the stock market did not affect his lifestyle one way or the other. If he, literally, I could say if he went and lost, $100,000. Would he be upset? Sure he would, but it wouldn't affect the way he lived. So his way of thinking, okay, when he went and played and did things, was totally different than me. Because for me, if I was to lose $100,000, the reality is I'd be in serious deep doo-doo, because my lifestyle would change immediately overnight. I would be in a big, big mess. So coming back to you, you need to figure out on paper what's important to you, how you're doing this, and how you're going to go and play it.
Yeah, and in fact, the trader who the reason I couldn't remember what we did yesterday, because I think I had done it. I was thinking about that trader who was having a problem, but I think I talked about that on Tuesday, and we might have touched on it. But I told him today. I just saw he made another comment on the video that if he's having certain problems, then he should become what I call, the way the market profile order block traders do, where you set your, once you place your trade, you put your stop loss in, you put your take profit in, and then basically you walk away from the trade and you let the market do what the market's going to do, and you basically either bet right or bet wrong. And that way, by placing bets on the market in that way, you minimize your losses. Now, of course, if you do something like put a trade on right before news, and you get that, 100 and some pip move against you, well, you probably shouldn't place bets right before news. And in fact, news is coming up shortly, but once again, the fastest 15 minutes in trading is over. So, fellow traders, once again, trading is more about you than anything else, because it's your portfolio, and it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.